South Africa's government of national unity is hanging in the balance. The GNU's two anchor parties, the ANC and DA, are holding meetings to discuss the future of the coalition. This comes after the VAT hike was passed in Parliament, a move the DA has repeatedly spoken out against. President Cyril Ramaphosa says the discussions will be approached with cool heads and everything will be examined properly, with the focus being on what is important for the people of South Africa. Amid the record gold price, the Reserve Bank added $1 billion to its reserves in March as a hedge against U.S. policy uncertainty and trade wars. The Sarb has purchased just over $2 billion worth of bullion since the start of the year, with gold reserves sitting at $12.5 billion. This is in step with many other central banks, as the yellow metal remains in focus amid moves by President Donald Trump that could revive inflation and disrupt global trade. Meanwhile, the Reserve Bank has issued a directive to the banking sector to cease executing so-called low-value transactions within the common monetary area through inappropriate systems. This has to be done by March 2027 and is part of measures to rein in potential money laundering. This will aid efforts to have South Africa removed from the Financial Action Task Force's grey list. In company news, strong organic growth and a successful asset acquisition program have given Sirius Real Estate a boost. The owner and operator of branded business and industrial parks in Germany and the UK inked 11 acquisitions over the past year worth over £250 million and says that supported a near 13% year-on-year rise in rent roll. CEO Andrew Coombs has added that the firm has a strong balance sheet and has demonstrated its ability to raise debt at attractive levels, which will allow Sirius to execute its healthy pipeline of further investment opportunities. In international news, Samsung is expected to report a weaker first quarter profit this week, hit by faltering sales of AI chips. But the South Korean giant says its TV business could suffer less from Trump's tariffs than some rivals, thanks to a manufacturing base in Mexico. Let's take a look for more detail.
Samsung Electronics reports earnings this week, and the numbers aren't expected to be pretty. Analysts predict the South Korean giant will report a 21% drop in profit over the first quarter. It's fallen behind in the race to supply high-end chips to AI champion Nvidia. That has left Samsung more dependent on the market for cheap memory chips, for which prices have been falling. Investors bet it will again lose ground to local rival SK Hynix, where profits are predicted to more than double. Samsung is also grappling with the impact of Donald Trump's sweeping global tariffs. The US president has hit South Korea with levies of 25%. But there might be a ray of hope for the firm's televisions unit. Speaking in Seoul on Monday, the president of the division said it would be hit less than rivals.
TV가 많은 이제 매출의 포션을 차지하고 있는데
Yong Seok-woo said most Samsung TVs for the US market are made in Mexico, which has largely escaped the tariffs set by Trump last week. The executive said Samsung could also move output as needed, with some 10 production sites worldwide. Nonetheless, the firm said it would keep monitoring the impact of the new tariffs, which could hit demand and raise production costs for appliances of all kinds. Samsung shares were down around 5% in afternoon trade Monday, falling along with other big exporters amid mounting fears of a global recession sparked by the trade war.
And oil dropped to its weakest since 2021, while most commodity markets, including metals, tumbled as an intensifying trade war between the United States and China triggered worries over demand for raw materials. Here's more detail in this report.
Oil slid on Monday to its weakest level in 4 years. Brent futures and US West Texas Intermediate crude futures hit their lowest since April 2021. Both benchmarks have lost more than 10% over the last week. It follows a large drop in oil prices Friday as markets worry US-China trade tensions could cause a recession. They fear it could see a fall in demand for crude while OPEC Plus looks to increase supply soon. Oil prices are an important indicator for Russia's financial health. Here's Kremlin spokesperson Dmitry Peskov.
Of course, this is an indicator that is very important for us, very important for filling our budget. And of course, we are following the situation very closely, which is currently extremely turbulent, tense and emotionally overloaded.
Commodity markets, including metals, also fell. Base metal prices in China dropped, with copper on the Shanghai Futures Exchange falling and hitting its lowest in more than 3 months. Gold climbed to a record peak last week, but later dropped amid a wider market sell-off. However, gold prices pared earlier losses Monday as some safe haven demand filtered through and analysts held an upbeat outlook for bullion. Investors are worried about the intensifying trade war between the US and China and its impact on demand for raw materials. Major stock indexes plunged as US President Donald Trump showed no sign of backing away from his sweeping tariff plans. Investors bet the rising risk of recession could see the Federal Reserve cut interest rates as early as May.